Let's get more on what we can expect from the local market. Chris, you can see Stan Shamu standing by there at IG Markets. Stan, let's start with the gold price down about 7%. Is there further to fall for our Australian miners today, because they've already had a pretty rough ride so far this year?
Yeah, absolutely. I think for a while a lot of analysts were flagging gold names as a value trap, and this has really turned out to be the case. Of course, as soon as gold broke that technical support at 1,320, the losses just merely accelerated, and it dropped to 1,277 before recovering slightly to 1,280, where it's currently trading. Of course, this will have an adverse impact on our local gold names, particularly Newcrest Mining. They've been dogged by quite a few issues at the moment. We've got operational issues, we've got disclosure issues, and recently there's talk that they might be bringing in one of their recent or ex-investment relations managers to come and help deal with the situation. So it's absolutely not looking like a good day for the gold miners. Even the likes of Medusa Mining, Perseus Mining, Oceano Gold, they're all likely to come under pressure. And of course, with the Fed looking like it's going to taper off QE, this is obviously pushing the US dollar higher, and this will continue to weigh on gold in the near term.
Also want to ask you about the carnage we saw on FX markets overnight. Obviously, the US dollar rising. We've seen the Australian dollar break the 92 mark, but where were the biggest moves overnight?
Yeah, the dollar index spiked back above that 82 level. It has since pulled back slightly, but I think it's actually good for markets to see the US dollar start to stall a little bit. This might be a positive sign for risk assets heading into the end of the week. Of course, equities, it's been a different story with a massive fall across the board. But with the US dollar continuing to be fairly resilient, the Aussie dollar came under significant pressure, dropping sub that 92 level. It's still hanging around there at the moment, but no doubt a lot of traders are still looking at selling it on any signs of a bounce. With the Aussie, there's quite a few factors weighing on it. Of course, we've got the Fed tapering off, which is supporting the US dollar. We've got China uncertainty, we've got interbank rates over there spiking, and of course locally we've got a lot of domestic problems that we're struggling with, which might see the RBA go through a prolonged easing cycle. So it's not looking good at all for the Aussie dollar at the moment. Any strength should be used as an opportunity to for fresh entries on the short side, while at the same time Japanese officials will be quite happy to see the dollar yen spiking back above that 98 level. It's since pulled back to about 97.50, but we've got BOJ Governor Haruhiko Kuroda on the wires today, and following the volatility we've seen in markets this week, I'm pretty sure he's going to throw a few curlers today. This might be a catalyst for price action in Asia, and we might just see relatively flat trading heading into Kuroda's speech.
By a few curlers, what could Kuroda say that's likely to upset the markets today of all days, when we're already looking at carnage at the open?
Yeah, well, we've been waiting for any comments suggesting that they might be looking at different ways to calm the bond market. They've said they do want to calm the bond market, but they haven't really come out with specifics. But it might be a situation where he thinks maybe the US has done the job for him, and he can just sit on the sidelines for now and wait and play it out and see how this affects Japanese equities and the dollar-yen positioning. So it definitely will be one of those weighted speeches where no one really knows quite how he might affect markets, but this is a market that's desperately in need of fairly positive headlines for equities in particular. So anything that he says, should it be slightly different from the rhetoric we've heard from him before, then this could be a key catalyst for Asia today. Whilst with equities they continue to fall, I think at some stage we might see a situation where investors feel maybe the sell-off is overdone in the short term, and they might look to get in. But of course, with the Bernanke put looking like it's swiftly waning, this is hard to foresee in the near future.
Stan, opening calls for our market today. We've taken a look at commodity prices. They were absolutely hammered overnight, with the exception of iron ore. What will this mean for the material space?
We're expecting a 2% drop at the open to 4,664. Now that's only a few points away from last week's low, which was 4,659. And most importantly, we're right near the break-even point of the year. So those are the 2 points to watch out for today. Possibly the only thing that investors might consider is perhaps buying the stocks as the market approaches the break-even level for the year. Of course, this has already seen us erase quite a big loss, which we've worked hard towards all year, and it will probably start to reveal a little bit of value in some sectors, particularly maybe the defensive names. But for the materials, it's not looking like a good day at all. While iron ore is up 0.5%, we're still calling, or BHP's ADR is still pointing down about 1.5%. We've got the gold names to look out for, and they'll look like they're going to open with losses of 5% or so. So it doesn't look like it will be good at all for the materials today. Apart from that, there's not too much company-specific news. I suppose with such big macro developments, even company news is likely to be ignored at the moment with sort of bigger picture moves happening in the local market.
Yeah, Stan, perhaps you can tell us though, why did we see the iron ore price hold up amid that broader sell-off in the commodity space, especially when we got all those concerns coming out of China and credit markets over there?
Iron ore pricing is not quite the same as we see for the rest of the metal space. Of course, that's generally based on the demand and supply dynamics as opposed to the fundamentals that generally affect the rest of the metal space. So it's actually a situation where we've seen iron ore tick a bit higher all week, whilst last week, of course, we saw it drop quite significantly. So it's also a little bit of a recovery after what was quite a big sell-off in a short space of time.
Yeah, absolutely. Stan Shamu, thank you very much for that explanation and all your time this morning.
Cheers, Kate.
Stan joining us from IG in Melbourne there. Coming up after the break, Phil Flynn from PFG Best in Chicago tells us how much of that market rout can be put down to QE and how much we should blame China for.
Officeworks works